Tesla stock, the pain continues. Tesla just broke $150 a share. This is an absolute key level for this stock. This is a line in the sand for the bulls and the bears. The bears are trying their hardest to get this baby and want to get this baby under 150. The bulls are trying their hardest, at least as far as the short-term bulls, to try to keep this thing above 150. So this stock just hit 40% down for the year, folks. 40%. We've got people flipping so negative on Tesla. It's pretty incredible. I mean, every time you think the sentiment around Tesla can't get any worse, it gets worse. Longtime Tesla bull downgrades Tesla. Here's why. So we're going to speak about this Deutsche Bank note, hear what he has to say in regards to that, and kind of talk Tesla here. Let's get into this.
Now, Emmanuel, it's great to have you. I was looking back to early March where you actually were suspicious of the delivery number ahead of that print, and you talked about downside risk. Why revisit the rating at this point?
Yeah, thanks so much for having me. So, look, we've actually been at the forefront of warning investors about meaningful near-term downside risk. Basically, Tesla is under tremendous pressure. There's a lot of pressure on the demand side for their vehicles, pricing pressure, earnings pressure, free cash flow. So if anything, we've had some of the lowest estimates in the near term, both for 2024 and 2025. But we've been okay with it as long as it was perceived as being temporary. And it would have been temporary because the Model 2 was supposed to come next year and re-accelerate things, re-accelerate volume, margin, earnings, and free cash flow. I believe long-term investors are on board as well. They know how bad things are now, but they expected things to turn around. Now that Model 2 is likely being pushed out, potentially even canceled, you do not have this on the horizon anymore. And so now...
Hold on. Wait just a flippin' flapjack moment. Wait. Model 2 canceled. Elon Musk already got rid of that whole drama about that being canceled. He already got rid of that idea. So the fact that you're going to run with something when the CEO of the company says it's complete baloney, who you would rather believe? Reporters that aren't even inside the company rather than the CEO of the company? That's crazy talk. That's crazy talk. Also, the car market in general is not good. Did you guys see CarMax? CarMax. Look at this. This is CarMax stock. CarMax stock, this is less than a month. Okay, so we can call this about 3 weeks or so, 3 to 4 weeks. This stock is down 22% just in the past few weeks, folks. CarMax numbers came out. They were not seen as favorable. There was weakness all throughout their numbers in general, and it doesn't look like it's going to get better in the short term for CarMax overall. So the fact is right now, and look at that Tesla, it's right under 150 right now. It's a battle. It's a battle for that 150 number. The auto market is not good right now. And if anything, it looks like it's going to get worse in the short term. You're going to see this from all the automakers. It's going to play out over this next, I can tell you, over this next few quarters here. A lot of these big automakers are not going to report good numbers. The auto dealer is going to report weakening their business. And so, I think a lot of people are trying to put this on Tesla like, oh, Tesla has problems. They're about to see, no, we have auto sector problems.
He's under pressure. Free cash flow is under pressure.
You'll see
There's
very
no
shortly.
turning point to this. And this is thesis changing, and this is why we're downgrading the stock.
And they're already seeing it. CarMax down 22% in a few weeks.
Or
they're already seeing
valleys
it.
between innovations. You think this is more structural?
This is essentially a function of an aging product lineup. So the core product lineup of Tesla is old. It's facing increasing competition. It's also facing larger headwinds around EV demand, especially in the US.
Oh my gosh, what is he talking about? The product lineup's old? So isn't the F-150 lineup, okay? that means nothing. So isn't the Corolla. So isn't the Honda Civic and the Honda Accord. Those are all old. They refresh. As Tesla's just refreshed the Model 3 recently, refreshed the Model Y recently, the S and X recently. So, an old product lineup, what are you talking about? The auto sector, you can, as long as you have refreshes from time to time, you can keep on that cycle for decades. This is an old product. This is called an iPhone. The first one came out in 2007, right? But Apple refreshes it. And they come out with little chips, and it's a little better, and the camera's a little better. You know what I mean? Like that's how this game's played. They're still selling plenty of iPhones in 2024, and they'll still be selling plenty in 2027, 20 years after the product came out. Model 3, Model Y, those vehicles haven't even peaked, in my opinion, not even close in terms of sales numbers, right? The S and X, those are always going to be more niche vehicles. The Cybertruck's not even remotely close to peak sales volume in regards to that. And then Model 2 is going to be insane whenever that finally releases.
And as a result, the volumes at Tesla are now less than flat, right? Q1 was already down. Q2 could also be down year over year. That's despite massive, massive price cuts over the last 18 months or so. And so, yes, it is structural. It is not cyclical. It could have been solved by having essentially a new product at a low price point, which would have been attractive and frankly could actually have been
no, disagree completely. Structural. There's a difference between a short-term hiccup and a trend. A trend is something that goes on over a 3-year span, 5-year span, 10-year span, okay? Where's Tesla's demand gone over the past 3, 5, 10 years? Up, up, up. We have a short-term hiccup here in sales volume, which is not the first time this has happened. This has happened to Tesla several times in its history. This is not the first time they had a sales hiccup. This is just one of many times they've had a sales hiccup. And so to, assume that what's going on short term with the company is going to continue to go on, it's just, you can make that bet, but good luck on that, because in 2 years from now, you're going to see Tesla's revenues are a whole lot higher than they are today. The volumes are a whole lot higher today. And then people are going to be like, oh, what happened?
At the $25,000 price point. This would have been the Model 2. If this is not coming, we're talking about the same old lineup for the foreseeable future.
Same old lineup?
With all the eggs being put into the robo-taxi basket, this is not a consumer vehicle. We believe that this creates much, much, much downside to earnings and free cash flow estimates for the foreseeable future.
Yeah, well, that was reflected in what is now your $2.40 estimate, $2.40 for 2027. But Emmanuel, I noticed that your price target is based on a 42 multiple, and I just wonder, why is that warranted, given from here to there, there's not a lot of growth to speak of?
Yeah, so you're really right on both counts. Basically, our view is with the current lineup of vehicles, the best Tesla could do is around $2 of earnings, probably for the foreseeable future. So call it till 2027, maybe even beyond or so. And there's downside risk to that as well if pricing continues to come down or if volumes sort of collapse. The thing is, it's not like Tesla is, shutting its doors. They're now going all in on robotaxi. We do a deep dive on robotaxi in the notes. We're not going to go through it now, but the point is, it's hard to put into numbers, and it's certainly not into our earnings model. But that optionality is very, very much there. It would be highly differentiated, and we think that we should at least account for it in the multiple. So the multiple is punchy despite no earnings growth, because in the end, investors in Tesla will basically say, okay, I understand the core business is no longer growing, potentially even shrinking, but look at how exciting this business could potentially be. Our rating, though, indicates this is highly risky. If it plays out, if they can deliver the robotaxi, is it exciting? Massively exciting. How long will it take to get there? Can it even get there based on technology risk, regulatory risk, operational risk? This is very, very difficult to say. So we're still applying an unchanged punchy multiple, but on much lower earnings trajectory.
It's fascinating to see the framing change so quickly, Emmanuel. Appreciate it. Hope you'll stay close. Emmanuel Rosner over at Deutsche.
Holy smokers, that was no joke, because that man is bearish. Oh my gosh. I mean, he's talking about $2 a share in EPS for the foreseeable future, looking out to 2027. What? Oh, that was one of the most bearish people I've seen on Tesla. And I've seen a lot of bears on Tesla. Okay? Then he starts to talk about robotaxi. And here's where things get interesting, right? If they can even pull it off, blah, 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 right? What is a company we know can pull off the impossible time and time again, right? It's Tesla. They're the ones that have done it over and over and over again. People have tried to bet against Elon Musk and Tesla again and again and again to be proven wrong again and again and again. They could never scale a vehicle. They could never not go bankrupt. They could never do this. They could never get to 1 million vehicles. They could never, be successful in this market. There's been a million things they've said over time, and yet they do it. And when I look at how rapidly these self-driving technologies really starting to get better now, I'm looking and I'm like, this is happening much sooner than I think a lot of people realize. And so, man, that was bearish. Shelving Model 2 for robotaxi could be a gamble that defines Tesla. What is Dan Ives talking about Tesla's done here? Okay, alrighty guys, let's get into this.
Today is going to be a big day. You say the clock has struck midnight. And the line that stuck out to me, trading in the Model 2 for robo would be a tragic gamble. in your opinion?
I think it would be a gamble that could maybe even define the future of Tesla next 3 to 5 years. And I think right now the big nervousness is Model 2. That's a key part of the growth. That's 50 to 60% of the incremental growth next 2 to 3 years. Robotaxis, autonomous, that's not for another 5 to 6 years. And I'd say, look, we've seen over the last decade, we've been through a lot of white knuckle moments from Musk and Tesla. This is up there. And this has really been a Cinderella story that in the near term has really turned into a nightmare on Elm Street. It all starts next Tuesday. Needs to control the narrative, because if there's no adult in the room, there could be darker days ahead.
So if he really does say, we're going to play this long game, and it's going to come at the expense of the two, you would re-rate?
That would be, if that happened, it would be a disaster of epic proportions. Because in the near term, and you've seen others throw in the white towel because of the fears of that and because of some of the stuff that's reported, that would really put a massive black hole or gap in the growth for the next few years. And if you look at the last sort of 2015, 2018, there were levers that Musk could pull and ultimately did pull. And that's why it's, you've seen the history. But this I'd say for the first time in 5, 6 years, long-term Tesla bulls are really calling, feels like they're about to hit the elevator if they don't hear what they want on Tuesday.
Okay. Sometimes we got to poke fun at the perma bears, right? Because they'll never, even if you say, well, what if this happens, they never adjust their story. But wait a minute. We got to also poke at the perma bulls like Dan Ives here, okay? Because man just asked him, okay, if this happened, would you re-rate the stock? And he just totally just wouldn't answer it, right? He just went on and said, well, that would be a disaster, investors, blah, 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 blah. And just totally bypassed it with his massive price target on the stock. And that's just, that's very perma-bullish activity. No different than when you say to a bear, well, what if inflation comes down, the Fed starts lowering? Would you change your stance? And they go take it to somewhere else and they won't say, yeah, I would change my stance. It's just, you got to understand like where people are at. And Dan Ives is definitely just a perma-bull.
It's like you and investors so downbeat on the prospect of the robo-taxi future.
Bullish on robo-taxis, bullish on autonomy. The problem is this would be like Cook on May 2nd coming out and being like, okay, iPhone 15. Now look, we're not going to have anything till iPhone 21, but trust us. Thanks for being on the conference call. So that's the problem, is that we're bullish.
It's always worked for him before.
Exactly. And I think now the difference is you need a refresh. Competition comes from all angles. Game of Thrones that we're seeing in China, and the credibility for Musk has definitely been questioned because the last 2 conference calls we've talked about on the show, those have been train wreck horror shows. So it all comes down to clock struck midnight. Tuesday night, adult in the room needs to step up, navigate the story, and that's why we call it a fork in the road moment. We are still bullish on the long-term Tesla story, but this is a Category 5 storm, and the pilot on the plane can't be Ted Stryker.
But what do you? There's a lot of just analogies and stuff there. But what do you want to hear? Because the China competition is not in Tesla's control.
Yeah, you need to hear 4 things. 1, what's the growth strategy in China? How are we going to reverse the trend that we're seeing in mainland China, which has been, we'll call it 60-70% of the growth, incremental growth story for Tesla.
How do they do that? Those cars are cheaper. They're nice. I saw them on the streets. I tested them. How are they going to reverse that kind of growth trend?
Hold prices, hold margins. We're going to basically bet on our brand, no different than what Apple has done, and I think many others, including Microsoft, depending on the products. But give the strategy there. What are the targets? And Sarah, they have to give guidance. What's the targets on growth realistically? What do margins look like? Where does it trough out at? AI, Musk, the 25% threat, recommit, keeping AI within Tesla, showing FSD, showing autonomy. That's been the problem here, is that if you had an adult in the room to navigate,
been the problem.
I think 30% of the sell-off here has really been Musk-driven, but it all comes down to, like, you could talk the talk, you gotta walk the walk.
Dan Ives, perma-bull, but at the same time, just delusional on other things. He talks about Tesla in China like it's the worst thing ever, and they're just doomed, and they're just doing. I just showed you the best-selling vehicle last year. They got the mantle. They're the king in China. So, I mean, the way these people talk about Tesla in China, you would think they got the 25th best-selling vehicle over there, and it's just, I mean, they're number one. Is China extremely competitive? Sure, but they're still number one. Every market's extremely competitive for vehicles. So that's just utterly ridiculous. Absolutely utterly ridiculous. Then he makes out like all the stock is down because of Elon Musk conference. Baloney. The stock is down because the company has deliveries numbers that are extremely disappointing based upon any historical standard for Tesla. That's why the stock is down. And people are looking at those delivery numbers and those production numbers and they're like, don't see it getting better in the short term. That's why the stock is down. Not because of Elon Musk in conference calls or any of that baloney, okay? Now, there is one huge thing that Elon Musk could say on this conference call that would very positively affect the stock, and that would be if he basically commits to margins will go up in the back half of the year. If him and the management team say that, I think that's a huge factor for the stock overall. So just, I don't know, man. I don't know what Dan Ives got going on there. Tesla stock. We call this Mr. Worst sentiment since 2018. The stock is down 40% year to date. We're in the fourth month of the year. So at this point, it'll be a zero by the end of the year. I mean, geez, oh, Louisa, it's insane, right? Worst sentiment I have seen in the stock since 2018. I've been a shareholder of this company for a long time, right? And I'll say it's been a roller coaster ride. You got a divergence of even investors out there. If people have bought the stock in the last 3 years, they probably have very little positive things to say about it, right? Because they're probably down in their shares if you bought in the past 3 years. However, if you bought in the past 5 years, 6 years, 7 years, 8 years, 10 years, you're doing phenomenal in the stock. You probably have a lot of very good things to say. So we have a divergence between the people that have made fortunes of money in Tesla. And remember, I hold a very small amount of Tesla shares compared to what I held, let's call it a few years ago, which now I'm starting to add those Tesla shares back slowly but surely. But, Tesla changed my life. I don't know whether the way to put it. I call my house, the one I live in, the house that Tesla built. And I call it that for a reason, because it is the house that Tesla built. It changed the game for me, right? Now, here's the deal, okay? Here's the Flipp and Flapjack and deal on Tesla. The stock is up about 700% in the past 5 years. About 700%. The stock is up about 11,000% since IPO, right? Now, during this 11,000% gain since IPO, we had about a 5-year period of sideways chop with this stock, where the stock went nowhere from about kind of 2014, 2015, all the way through 2019, did nothing. You could pull it up over that time period, did nothing. It went up, it went down, it went all around, but it did nothing. It's had countless major crashes of 20% plus in a matter of 6 months. A real crash in a stock is any time a stock goes down over 20%, and it happens in less than a 6-month span. The amount of times Tesla's done that it's hard to count them all. It's so many, it's ridiculous. This kind of looks flat because the stock's gone up so much, but there's so many crashes in here, it's insane. And also, the stock is down huge the past 3 years. So there's something to kind of keep in mind in regards to that one. And despite all that, the stock's still a 10,000+% gainer since IPO. Incredible. Now, you got to differentiate between what's going on, the trend long term with this stock versus the short term, right? This is a trend, folks. What transpired from 2013 to 2023, that's a trend. Going from $2 billion of revenue to nearly $97 billion of revenue, that's a trend. What's going on in the very short term is not a trend, right? Interest rates go up massively, it's going to hurt big ticket purchases. Look at how many homes are being sold. I mean, right now, you got to understand, right now we're going through an interesting phenomenon. Right now in the United States of America, there's around the same amount of homes being sold as in the depths of the great financial crisis. That's right now, okay? So big ticket purchases are not doing well. Look at a company like RH's numbers. RH, Restoration Hardware, furniture company, and they even sell to the wealthy, right? The top 10% of income earners. Their numbers are the worst they've been posting in years and years and years. Big ticket purchases are not in a good place, and you'll see that play out in all the automakers' numbers over this next year as well. All Tesla's competition, or whatever you want to call it, okay? And so we're going through an interesting short-term phenomenon that is what it is, but what happens in the short term is not a long-term trend, okay? This is a trend. This is number of vehicles Tesla delivered, okay, from 95,000 to 1.8 million. That's a trend. This whatever happens in 2024 is not a trend. That's a short-term hiccup, whatever you want to call it, okay? Now, next argument that could be made against Tesla is it's so expensive. Look at the forward P. Well, keep in mind, first off, they could eat that forward P up very, very quickly starting in 2025 and beyond as a company increases profitability quite dramatically and they get their revenue growth going back in the right direction, along with obviously the employee cuts. They are going to bring down expenses a ton here, and the price drops are likely done at this point in time. And if anything, they're going to start going up on price in the back half of this year. In my personal opinion, they've already actually started to go up on some price on some vehicles, okay? The second thing I'll say is, you know what else is expensive? Real estate in New York City. It's very, very expensive there. Why is it? Well, there aren't many New York cities out there, are there? And a lot of people want to be in New York City, okay? So when it comes to Tesla, there aren't just a bunch of Tesla stocks around. Tesla's a freak company. That's a freak opportunity, right?